There's no such thing as a free lunch is an old saying that came about because back in the day in the 1930s, if you went to a saloon and you ordered a drink, the bar owner would give you a free lunch. And so everybody thought that they were getting a free lunch because you buy a drink and you get something for free, but there was a hidden cost to that free lunch. When you got that free lunch, you had to pay for drinks, and many times you ended up buying a whole bunch of drinks and you were eating something that's really bad for your body. So although you thought you were getting a free lunch, there's a hidden cost to that free lunch. Well, nowadays, there should be a new saying. There's no such thing as a free stimulus check. What's up everybody, I am Jasprit Singh from the minorityminds.com where money minds rethink rich. I put out a video recently where I talked about if you are getting a stimulus check, how you do not want to use your free money. If you haven't seen that video yet, I will link it for you in the description below. Since we are a very heavily financial channel, that video got a lot of love. Thank you. But after all the things that we've discussed on our channel, some of you were concerned about the free aspect of this money. It's not free money. We'll all be paying for it in the future with higher taxes. Sorry dude, it's not free money. It's my tax dollars funneling back to the taxpayer. They're not giving us free money. They're giving our tax money back. You're right. There's no such thing as a free lunch. And there's no such thing as a free stimulus check. And so in this video, I want to dissect the real cost of a free stimulus check, but let's start by freeing that thumbs up button below. The United States government is giving out stimulus checks as a way for the government to stimulate you, to help you pay your bills, and to help stimulate the economy, because when you take this money and you spend it at Amazon and Lululemon and Walmart and Chipotle, now these companies make more money and then they have more money to reinvest back into their companies. But have you ever wondered who's paying for your stimulus check? I mean, that money has to come from somewhere, right? Wait, isn't the government paying for the stimulus check? Well, let's take a look at the cost first. So the Washington Post says that 160 million Americans got a stimulus check. So let's assume for the sake of this example that everybody is going to get a $2,000 stimulus check. If each of these 160 million people got a $2,000 check, that's a total cost of $320 billion that somebody has to pay for. I should also include that this $320 billion is just the cost of the stimulus money. It doesn't include all the administration costs and the printing costs if they're printing physical checks and the mailing costs and everything in between. It's gonna cost $320 billion to actually just have all this cash and mail it out. And so if the government is the one that's signing the checks, that means this money has to come out of the government's bank account. At first glance, you might think, no big deal. The United States is the richest country in the world, and the United States government loves spending money, so what's another $320 billion? They can afford that. Except the United States government doesn't have $320 billion just sitting in a vault somewhere. That's why our national debt has been skyrocketing. We don't have enough money to fund our regular bills, and when we don't have enough money to pay our bills, we go into debt to fund our bills. Plus, the United States gets their money to run the government and run the country and pay their expenses and pay their debts through you, taxpayers, through tax dollars. But the real cost of your free money, the stimulus check, goes even deeper than that. So let's start by debunking some myths, because there's a lot of false information floating around about the cost of your stimulus check and who's paying for it. If you get a $2,000 stimulus check, is that going to come with a new tax bill, or are they going to take money away from your tax refund? No. If you get a stimulus check, it is not going to affect your tax refund, and it's not going to change how much money you have to pay in taxes for 2020 or 2021. The second question you might have is, if you get $2,000 in stimulus, do you have to pay taxes on the stimulus money you got? Again, the answer is no. Your stimulus money that you get from the government is not taxable. So if you get a stimulus check, you don't have to pay taxes on it, and that's different than your unemployment income, because if you get unemployment income, you have to pay taxes on that. So if you're not going to get a tax bill from the government for your stimulus check, and they're not going to take it out of your tax refund, and you're not going to have to pay any income taxes on your stimulus check, where is the cost of the stimulus check coming from? Remember, the government is the one that's paying for these stimulus checks, and the government gets their money to pay for these stimulus checks and all their activities through you, taxpayers, through tax dollars. So at first glance, you might think, oh, the government is just giving me some of my tax dollars back, but it's not so simple. The government is drowning in debt. What that means is the government doesn't make enough money to fund their regular activities. And so now, if you tack on all these stimulus programs on top of that, they're going to have to go deeper into debt to fund these stimulus programs. So in order to send you your stimulus check, they have to go into debt to get the cash to fund you the stimulus check. And now they're going to have to pay this money back plus interest. It's kind of like having a credit card with no limit. You can spend all the money you want, but eventually you got to pay it back plus interest. And so if you keep swiping more money, your minimum payments are going to keep going up. That's what's going on with the government. The national debt keeps skyrocketing, and so the government keeps having to spend more and more money on its interest payments on all the debt that it owes. So that means anytime the government makes money through tax dollars, a bigger portion of this tax revenue is going to be going not to build your roads and your infrastructure and to help people and to build your communities, but to just pay off your past debts and the interest. That means less of your future tax dollars are going to be used to help you and your community because your money is going to be going just to pay off your old debts. And that also means that if the government wants to keep spending money, they might have to raise your taxes. If you had a credit card with no limit and you kept swiping and swiping and swiping, your payment is going to keep growing and growing and growing, and either you're going to have to make more money to pay off this payment or you got to stop swiping. In the government's case, chances are the government's not going to stop swiping because the government loves spending money, and in order for the government to earn more money, they're going to have to generate more tax dollars, which means higher taxes. But less of your tax dollars being used to actually benefit the community and a higher tax bill is just the first part of the cost of a free stimulus check. The flip side is your shot at becoming wealthy. Back in 1835, the United States had racked up $25 million worth of national debt. It was a big deal at the time, so President Andrew Jackson made it his point to pay off their debt. So during his presidency, he worked very hard to pay off their $25 million worth of debt. And so then the United States had $0 worth of national debt. Between the mid-1800s and now, the United States has racked up $27 trillion worth of national debt. Just in 2020 alone, the United States spent $3.1 trillion that it didn't have. So where's the United States getting all this money that it doesn't have? We already talked about how the United States makes money through taxes. And at the time of me recording this video, the United States hasn't raised taxes yet to cover these costs. So how is the United States funding all of these activities that it doesn't have the money for? Well, debt. The United States owes a lot of money to countries like China and Japan, but the thing that makes this debt so interesting is sometimes the United States just creates its own money out of thin air. The Federal Reserve Bank is the central banking system of the United States. But the interesting thing about the Federal Reserve Bank is that it's not federal, it even says so on its website. It's not a reserve because they don't keep a bunch of reserves in a vault somewhere, and it's not a bank. You and I can't go there to deposit money. What the Federal Reserve Bank, or the Fed, does do is they control the monetary supply or the money supply in the United States. So when the United States spends $3 trillion that they don't have through taxes, then what they do is they call up the Federal Reserve Bank and they ask the Fed to print $3 trillion, and then the Fed works with the Treasury Department and they print this $3 trillion, and then they loan this money to the United States government, and now all of a sudden the United States government just got a new influx of cash through the Fed, and then they inject this money into our economy. This is where things get really interesting, especially if you're a financial nerd like me, because people say, well, if the Federal Reserve Bank can just print trillions of dollars and give it to the United States government, why are we even paying taxes in the first place? Because the Fed can just print this money and give it to the United States government. Well, because there's a cost to printing this free money. What is my good friend Benji worth? $100. Okay, what is $100 worth? Is it worth a shirt? Is it worth a dinner at a nice restaurant? Is it worth a pair of shoes? $100 is worth whatever $100 can buy you. And what $100 can buy you isn't always the same. In 1970, $100 could buy you way more than what $100 could today. You would need about $700 today to buy what $100 could back in 1970. Your $100 bill, my good friend Benji, is just a piece of paper. And as more money is created and printed and injected into our economy, the value of each dollar that we have, and the value of each dollar that we earn, and the value of each dollar that we save goes down. This concept is called inflation, and inflation is why your rent keeps getting more expensive every single year. It's why your groceries get more expensive every single year, and it's why your vacations get more and more expensive every single year. As more and more money is printed, the value of each dollar that you have goes down, and that pushes the price of everything around you up. So now, as more money is printed, you need more dollars to go shopping, and you need more dollars to afford your rent, and you need more dollars to afford your groceries. The Fed is very open about this. They say that they want to increase the amount of money we have in our economic system. That way they can increase inflation, because that's how they can ramp up the economy, by throwing more money into the system, which makes the price of everything around you more expensive. Inflation isn't always bad. I mean, yeah, your expenses do go up, but it's also supposed to make your wages, your salary go up too. The issue that a lot of people have with inflation is your salary grows like this while your expenses are growing like this. So you make a little bit more money, but now your rent is way more expensive, your groceries are way more expensive, and the cost of living is way more expensive. So you made a little bit more money from your job, but now you're paying out way more money. The people who actually benefit from inflation are the people who own assets, things like stocks and real estate. Because now when all this money is injected into our economy, where does this money flow? It flows to companies and it flows into real estate. As more people have money, they spend it. They go to Walmart and Amazon and Lululemon and Chipotle and they spend their money there. And now these companies make more money, so they show bigger profits. And when they show bigger profits, their stock prices go up. And so now the stock market has a whole lot more money in there because everybody has spent all their money at these companies. And so these companies make more money, and the people who own these companies, the stockholders, the investors, the asset holders, they get richer because now this inflation has pushed these companies higher. It also benefits people who own real estate because now if all this money is injected into the economy, people will use some of this money to buy properties. And when there's more buyers buying properties, that pushes home prices and real estate values up. So now if you own real estate, your property value just grew because everybody wants to buy real estate. The people who end up paying the price for inflation is everybody else because you got a $2,000 check in the mail today, which makes you feel good and it makes you feel richer. And then you go on a shop. You go and buy yourself a nice pair of Lululemon leggings. You go to the Gucci store, buy yourself a nice scarf, and you buy yourself a nice meal with some extra guac. After that, you have nothing to really show for your money. And that's when you find out your taxes go up to cover this cost of all these stimulus checks. And that's when you find out your rent is going up and your groceries are getting more expensive and everything else keeps getting more expensive while your savings don't have as much buying power because of inflation. So what's the cost of a free stimulus check? Well, there's 3 prongs to that. The first prong is more of your tax dollars are going to be used to pay down the national debt because in order to fund these stimulus checks, the United States has to go deeper into debt. That means less of your future tax dollars being used for something productive and more of your future tax dollars being used to pay down interest. Second, if the government wants to keep ramping up their spending, they're going to have to raise their revenue, which probably means that they're going to have to raise taxes, which means that your taxes could go up. So when you go to work to earn money, you get to keep less of your paycheck. And third, the printing and creation of more money causes higher inflation. Now your paycheck doesn't stretch as far because everything is more expensive and your savings are losing value. That's why I propose changing the saying from "there's no such thing as a free lunch" to "there's no such thing as a free stimulus check." If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. The financial pains we had in 2020 are trickling into 2021 because in 2020 we had 100,000 businesses permanently shut down. These were 100,000 businesses that were originally temporarily shut down because of the pandemic,